My name is Michael Gayed, publisher of the Lead Lag Report. Joining me for the hour is Benjamin Cowen. We're going to go into the cryptoverse today. Ben, introduce yourself to the audience. Who are you? What's your background? How'd you get involved, interested in trading, investing, and what drew you to crypto?
Hey, Michael. Thanks for having me. Pleasure to come on the podcast. Yeah, so my background is in mathematics. So I was my undergrad, PhD in nuclear engineering. So I don't really have a traditional finance background, but I became interested with investing when I was back in college, and it was actually during that time that I studied some cryptography. I was in some cryptography class back in, I believe, my junior year of college, so back in 2011. And during that time, I discovered cryptocurrency. I mean, back then it was just essentially Bitcoin, um, and so that was. I was invested and interested in the stock market already, but sort of taking these cryptography classes sort of piqued my interest in cryptocurrencies, and from there I went to grad school, continued to learn more about crypto and be an investor in it, and eventually I just after learning many lessons the hard way, I decided to sort of start my own YouTube channel and everything, and run with that and try to communicate some of the lessons of the cryptoverse that I've learned through the years, and so hopefully other people can potentially avoid some of those mistakes, and also one of the reasons I was interested in talking about crypto to sort of the masses is because there's a lot of I think there's a lot of good investing practices that a lot of people are aware of and familiar with, and within other asset classes. But I think risk management has been something that's been missing from the cryptoverse to a large extent. And so I was hoping to help contribute to the maturation of the asset class.
You built a hell of a YouTube following. Was there a particular message or particular moment or particular video that really started things start to go vertical for you?
Yeah, so it was really, my channel started to take off when I started focusing more on Bitcoin. Before that, I wasn't as focused on it, and one of the reasons was because I I had received some advice, and it was actually, looking back, it was actually very bad advice. But the advice was, don't talk about Bitcoin. There's already enough people that talk about that, and so the market is saturated. And so I kind of avoided talking about Bitcoin for a long time because I just, I was sort of under the impression that people didn't really want to hear my opinion. And then once I started talking about it, that was actually when my channel really started to take off. And I think another thing is there's also some element of luck, because it wasn't too long after that the Federal Reserve printed $6 trillion, and of course some of the riskiest assets are cryptocurrencies, and those are the ones that are going to obviously benefit from just excess liquidity.
So part of your description is that you're focusing on high quality cryptocurrency education, which of course implies that there's a lot of low quality in the space. And I see a lot of the videos obviously focused on macroeconomics. Um, Talk about the state of people's understanding of cryptocurrencies. I get the sense that there's the kind of silly meme FinTwit side, and then there's the much more serious technology, quant math driven, solves the world side.
Yeah, so I think the probably the best way to break it down is to sort of say there's Bitcoin, and then there's everything else. I would almost start to say there's sort of there's Bitcoin, and then there's Ethereum, and then there's everything else. But essentially, you have more serious projects, like Bitcoin and Ethereum, and I think there's a few altcoins that provide some utility. But the reality is most cryptocurrencies. Are they're not going to stand the test of time, and it's always worthwhile for me to try to communicate that to people, just because a lot of people sort of fall into this illusion that a lot of these cryptocurrencies, especially the meme coins that you mentioned, will inevitably reach their prior all-time highs. So a lot of them hit highs in 2021, when we were printing a lot of money, and we were at very low interest rates, and there's this idea that, and this doesn't just go for meme coins, but a lot of different cryptocurrencies. A lot of them really never return to their glory days. They don't go back up to their prior all-time highs in future bull markets. Some of them do, but most of them don't. And the reason why is because essentially, crypto is very cyclical. So by the time that Bitcoin reaches new highs, whenever that is, there's going to be like another generation of altcoins that are sort of theoretically, anyways, improving upon the last generation of altcoins. If you go over to like a website like CoinMarketCap and go to the historical snapshot page, what you'll see, if you look at, say, like 2013, 2017, and 2021, what you'll see is that Bitcoin is always up at the top, right? It's always number one, but a lot of the coins below it tend to just come and go. And so I think it's sort of like an important part for people to recognize is that, look, there are some serious projects in the space. There's Bitcoin and there's Ethereum, and then there are some other ones that can maybe stand the test of time, but they're very risky plays, and so you really don't want to put a lot of money into extremely speculative alts that are likely just going to get replaced by something else in the future. So that's why in general, when it comes to crypto investing, um, heavier allocations in say Bitcoin tend to do quite well because Bitcoin is sort of the time tested asset, whereas everything else we're sort of trying to figure out where exactly does it belong. Well, so Bitcoin actually has existed in environments before with interest rates that are off of zero. I mean, actually, it was during the 2016, 2017 bull market that the Fed was actually raising rates. Now, they didn't raise them nearly as high as they are today. I mean, I believe the terminal rate back then was only like 2.5% before they ended up having to sort of pause and then cut. And I believe they started cutting in mid 2019, which coincidentally also corresponded to just a few months after Bitcoin sort of put in its high in 2019. So there is some element of Bitcoin has existed during a period of interest rates that are off zero, anyways. But you're right in the sense of don't know how Bitcoin's going to behave in a period of much higher interest rates. Like right now, we're at a 5.25, and we don't know how it's going to behave if we stay at these interest rates for a much longer period of time, which of course is what the Federal Reserve is suggesting, although the bond market certainly does not agree. So I think that, yes, I do think there's going to continue to be some cyclical component of Bitcoin. And I think we're continuing to see that play out right now, right? Like this, the pre-halving year. And if you compare this to say like 2019 or 2015, you'll see very similar types of price action, right? You'll see some rallies, but a lot of these rallies will of course fail to get close to the prior all-time highs. Um, I think what you're likely going to see, this is just my best guess, is that the less, or sorry, the more speculative plays, especially the meme coins, and I say this right now as some meme coins are going up, right? But I do think that as we get into uh, longer or a higher interest rate environment for a longer period of time, it's going to force the cryptoverse to really seek out more utility rather than just being this sort of like this, nebulous speculative play that, hey, eventually it'll provide some value. So invest in it now. I think a higher interest rate environment will probably help purge some of the garbage out of the space, and it'll likely divert money towards sort of more the blue chips. One thing that we've seen over the last several months in tech stocks is that a lot of the capital has flowed to some of the large caps, right? Like Apple, Amazon, Google, Meta, a lot of Nvidia, a lot of these tech companies are really holding a lot of these indices up. I mean, if it weren't for them, the market the market would actually be quite a bit lower if you look at something like, like the like SPX or the Nasdaq. But you'll actually see a very similar thing going on right now in crypto. If I actually posted a chart just a few minutes ago, like an hour ago or so, and it shows how, it looks at like the 60-day return on the top 50 cryptocurrencies, and you can see that the best returns for the most part are in the top 5 or 10 cryptocurrencies, and Bitcoin's actually leading the pack over the last 60 days right now. So you're seeing the same thing happen in that's happening in tech stocks. We're seeing the same thing happen in crypto as well. And my interpretation of this is that it's a flight to relative safety. I mean, it doesn't mean that Bitcoin can't go back down. I actually do think that crypto will come back down. It's a pretty typical thing for it to happen in the pre-halving year. So, but I think it's sort of a flight away from um, lower liquidity assets and a flight to assets that have more liquidity. Because if we do go into a recession, or if it's just a scare, like a recession scare, that's where these lower market cap cryptocurrencies that have very low liquidity, they can go down a lot quicker than Bitcoin can. And we've seen that play out in the past as well. So my general expectation is that during a higher interest rate environment, like we're starting to see, you will likely see the higher market cap coins retain their value better, and it will also likely lead to sort of some purge of some of the highly more speculative plays that don't really offer value.
I'm curious, Ben. Are you surprised that Bitcoin isn't going absolutely vertical? I mean, I made this point maybe like a month ago or so as the regional bank crisis was kind of unfolding, but saying that this is kind of the wet dream for the Bitcoin maxis, right? I mean, it was born out of the great financial crisis, and we can debate whether this is a legitimate financial crisis or not. At least the market for now seems to think it is when you look at the stocks of regional banks. But I would have thought under this set of circumstances that Bitcoin would be pushed in 40,000 already. Any thoughts on why it hasn't? It's kind of stalled a bit here as things have gotten worse.
Yeah, I mean, I think there's some element of, I mean, yes, it was born out of the financial crisis of 2008, 2009. I mean, to some degree, it has gone up a bit since the start of the year. I mean, it's up 2x from, essentially from its low. In terms of why is it not at 40K? I mean, that's obviously anyone's guess. And by the way, I mean, that could always happen at any time. I mean, Bitcoin does tend to move somewhat discreetly, unlike major indices. It'll just sort of sit where it wants to sit for a while, and then go to wherever it wants to go very quickly. We saw that happen in March, and we saw that happen in January. It doesn't really spend a whole lot of time in the uptrend. It quickly gets to where it wants to go, and then just sits there and pauses for a while. So yes, to some degree, it's not. It's as we watch regional banks fall, we have seen Bitcoin go up. But I also think that probably the more pressing thing to consider is that some of the reasons that Bitcoin has gone up too is just liquidity flow from the altcoin market back to Bitcoin. We've seen the Bitcoin dominance go up quite a bit, and so I think that's leading Bitcoin as well to go higher. But one other thing, and I think this is an important point as well, is that Bitcoin, under some arguments, could be considered a measure of excess liquidity in the system. So, if there's a lot of excess liquidity, then Bitcoin tends to do well. We saw that, of course, in 2021 and 2020. When liquidity is sort of pulled out of the system, it's more difficult for Bitcoin to do well. I mean, Michael, I also think there is just some element of it's just a cyclical behavior of Bitcoin to sort of chop around during the pre-halving year, and we of course can assign narratives to why the price is doing a certain thing. But my general interpretation is that pre-halving years are accompanied by half the year going up, half the year going down. And if we are going to get another move up in Bitcoin, I think it's probably going to happen within the next month or two, because I'm still, I still have of the opinion that the latter half of the year for crypto is likely not going to be great, especially for the altcoin market. And so, I mean, I can't give you a specific answer why it's not at 40K, but I mean, sort of summarize some of the points. I think it's a measure of excess liquidity. I think it's more of a cyclical behavior that we try to assign narratives to, and I think I think the cyclical behavior will actually continue. It's interesting. We sort of look for reasons why this time is different, but there's also a lot of elements to things not being so different. I think things are probably a bit more exaggerated this time. Like things are probably worse today than they were in 2019. But there are a lot of similarities, right? Like 2019. Bitcoin rallied for half the year and then it fell for half the year. And guess what? We also had an inverted yield curve back then too. And just like we have an inverted yield curve today. And actually once the spread on the 3-month and the 10-year reached its most inverted part, which I believe happened in Q3, the local high or the yearly high for Bitcoin was already in. Once the uninversion process started to take place. I think we could see things play out in a very similar way, right? So, think about it, right? We had a high at the end of 2021. We had our pretty typical bear market, just like 2014, 2018, and 2022. And even if you take a time averaged ROI of 2014 and 2018, it essentially gives you almost identically what happened in 2022. And very similar things could be said about averaging 2015 and 2019 to get a blueprint of what's going on in 2023. It does seem like eerily similar. And now we're sort of faced with this thing of like, well, what about this time? What happens if we go into a recession? What happens if the bear market goes on? We had a very brief recession in 2020. And it came, of course, after the uninversion of the yield curve. Now, I'm not suggesting that the inversion of the yield curve was able to predict the pandemic, but I do think when you get these inversions and then when they uninvert, it kind of shows you that the economy is in a somewhat fragile state, and it wouldn't take a whole lot to sort of shake the market. And that's what happened in 2020. And then what happened, right? The bull market began. So Bitcoin has this way of it finds some type of low in the primary bear market year. It then rallies up for a while, and it makes everyone think it's going to new highs, right? We see the calls for highs. Imagine if it were to break up again. The highs for the calls for new highs would even get louder. But then what normally happens is before the real bull market begins, you have another scare, right? It comes back down and it scares everyone before the real bull market begins. And I think we're likely going to have the same thing. And I think that when you look at the cyclical behavior, there are a lot of similarities, right? There's the inverted yield curve. We've rallied for at least we've already rallied for 4 months. In 2019 we rallied until June. Though I would argue that we also sort of bottomed out this time a month before. So it could already be over, right? The rally could already be over. But I think what we have to face is at some point we're gonna see the yield curve uninvert, and we're gonna have to deal with potentially a recession. We obviously can't be sure yet. I think the biggest counterpoint is there is a lot of liquidity out there. Even though, a lot of the leading indicators suggest a recession's coming. A lot of the lagging indicators say, well, yeah, maybe it's coming, but it's not here yet. I think it's probably going to play out in a very similar way. Like we're probably going to have one more big scare. My guess is that it's probably going to happen sometime in the second half of the year. It could happen as late as early next year. But I think that's what's going to happen again. And then after that, once we go back to lower slightly, I don't think they're going to go back to 0% interest, right? As an interest rates, I think maybe they'll drop it back down to 3 or 4% or something. But once they turn the money printer back on, that's when we could theoretically go on a bull run that could perhaps take us to new all-time highs. So I think it's probably just going to play out in a very similar manner, even though I think a lot of us try to push back on it, and we don't want it to be that simple, but it's been that simple for a long time. And I think until that breaks, like I'm just going to assume that that's how it will play out.
Do you do any investing in the equity side, the miners, or are you purely on the crypto side?
No, I'm mostly on the crypto side in terms of within the cryptoverse. I am also invested in equities and in major indices and stuff, but not related to crypto.
Okay, so I'm glad you mentioned that because I feel like a lot of these spaces tend to focus on the idea that the speaker is all in on just that part of the investable landscape, is not diversifying across asset classes. So I'm just curious. Let's talk about your other investments, your equity side. What have you yourself been focusing on? What are your thoughts on markets? Short term, long term, stocks in particular.
Yeah, so I mean, a lot of people always find it surprising, but I actually own more equities than I do crypto, um, and the reason is simple. It's because crypto can drop 90% in a few months sometimes, and I've been in that boat where I had too much invested in crypto, many cycles ago, and you just sort of what you can watch your wealth evaporate before your eyes, right? Because even though you think that it's the next best asset class and it's going to go to 100 trillion or whatever, the reality is that there's just sort of this bubble behavior, and so I actually do own more equities than crypto. Mostly, what I'm mostly interested in are just low expense ratio index funds. Like on Fidelity, there's FZRX, FZILX, which is more international. There's FNILX, which is for obviously large caps. But that's what I'm mostly focused on. Occasionally, I will get into individual stocks, but only when I think it's like really great value. Um, like a few months ago. So I was watching what happened with Netflix back last year, and I saw it go down 77%, and no one wanted to buy it, and and I didn't buy it either, and then I watched it rally. So then when Meta did the same thing, I'm like, all right, this is a great. I told people, I'm like, this is in Into the Cryptoverse, the ITC group. I told them, look, this is a great opportunity. Below $100, this could be the low for Meta, and it was, and so what I'm more so interested in with individual stocks is just if I can find deep value and I feel compelled enough that it is at a very great discount, then I will buy it. But most of the time I don't buy individual stocks just because I'm not that interested in the idiosyncratic risk of that particular stock. I'd rather just buy the market, and if by buying the market you sort of cancel out the idiosyncratic risk and you only deal with the market risk. Um, so I generally just prefer index funds over say individual stocks. But again, like I said, like if one stock really gets hammered hard enough, like Meta did last year, then I will be compelled to get an allocation in that individual stock. But it has to be a company. Think about it. Meta late last year was trading 35% below its 2020 low. Below that, 35% below that. Think about how badly other risk assets would have to get hammered to go 35% below their March 2020 low. That's how undervalued. That was to some degree you could say that means it's undervalued. Obviously, one of the reasons, the fundamental reason, of course, is because it was still producing. It's a cash cow, right? It was still producing a ton of cash. So there's no reason it should have been valued that low. So in general, it's mostly just index fund investing for me, and occasionally I will go into individual stocks, but only if I feel like they're very very undervalued. Just because I think that most of the time the general index is going to beat out an individual, trying to pick individual stocks.
Ben, I had put out a tweet, I don't know, maybe 4 months ago, around the time that Musk was doing his war on Twitter bots. I said, killing off the bots is the most bullish thing you can imagine for Bitcoin. And my thinking there, which I still maintain, is that a lot of the silly season in the quote unquote shitcoin, I think, was largely emotional manipulation driven by algos. Maybe I'm wrong on that, but I do think it's very clear that there were a lot of bots that were trying to pump and dump and cause a degree of FOMO around Twitter, and prices set by the marginal buyer, and the marginal buyer was seeing all these tweets. Am I off on the idea that there's maybe going to be, assuming Musk does win the war on bots, there would be less manipulative type of price action around some of these nonsense projects, shitcoins, or are people going to still gamble because that's what people do?
I think probably elements of both. I do think you're right. There's a lot, and it's not even just bots too, though. There's also a lot of for lack of a better term, right, influencers that will promote this stuff, right? And one of the reasons they do is because they get paid to. And I mean, it's really sad, but that's just the reality that we live in. So even if you don't have bots doing it, there's still going to be other people that promote it. Obviously, getting rid of the bots will help. I mean, I wish I could put out a tweet without seeing 20 bot replies immediately to what I'm saying. I also
By the way,
think.
it's even happening on the Twitter space on the thread. There's a
Oh
bot.
yeah. The minute I retweeted the thing, I just saw like 3 bots, like immediately respond. And so that is it's very difficult to sort of see all that and see the bots constantly. But I also think I think the other thing though that might have another impact, maybe an equivalent impact or more, is just the Fed removing liquidity from the system. And I mean, the higher risk plays like these meme coins and these altcoins that really, so I mean, a lot of the altcoins that don't provide any value, I mean, those are the ones that are probably going to go down more. And the reason and people will sort of flow back to Bitcoin. So I mean, I think you're right in the sense that that it's bullish for Bitcoin in general. What I think it's really bearish for is altcoin valuations on their Bitcoin pairs. I mean, anyone who follows my channel will know that I essentially only value altcoins in terms of their Bitcoin valuation, right? Because what's the point in valuing on their USD valuation? If you're buying an altcoin and it's underperforming Bitcoin, even if it goes up 20%, I mean, if Bitcoin went up 50% during that same time, it's not really a great investment because you could have taken on less risk with something that's probably not an unregistered security and receive more reward. So yeah, I think there's a lot of things right now are pointing towards liquidity flowing away from the altcoin market and towards Bitcoin.
Playing off of that, I never thought I'd ever say this in my life. I've been all over PP with with what's going on with these trending hashtags, and me kind of pointing out that the bots maybe are not fully gone because there was a stupid amount of tweets around this meme coin. And I saw that, and I said to myself, you know what? It's like, okay, here we go again. This is probably a sign of a blow off or some kind of juncture where risk assets get hit, right? Which does dovetail into my argument that we're in probably a correction that started the third week of April. I'm just curious your thoughts. I mean, have you been tracking any of this stuff with this PP? Is this just kind of a flash in the pan, sort of, is it a warning sign from a sentiment perspective?
Yeah, I mean, I don't really track the meme coins too much because there's so many of them. There's some wallets that if you look at them, they're creating at least one meme coin a day, and obviously the goal is to just hit the jackpot by creating one that catches and goes up 1,000%. um I think to some degree, I think there's a lot of people that are just sort of trying to relive the glory days of 2021. And they're all just sort of flocking into some of these meme coins and in the hopes of being able to sort of relive that experience. But yeah, I do think it is somewhat of a warning sign. Just a few weeks ago, I thought it was hilarious because on the trending tab on Twitter, we saw, and I tweeted about this. On one thing, we saw that alt season was trending, and then right below it, I saw that recession was trending, and I'm like, what world are we living in these days? It just seems like this is sort of the last gas before what I would likely think of as sort of a downtrend starting sometime in the middle part of this year. So Michael, I think you're right. I think yeah, to some degree, it's a warning sign. It doesn't mean that it has to end tomorrow. Things could still go on for a while. It's really hard to predict exactly when things are going to turn. But this is one of those things where 6 months from now, we're all going to look back and be like, wasn't it obvious, right? Like when we had these meme coins pumping up 500% over a week, should that not have been the warning sign that the market was getting a bit too a bit too greedy again? So yeah, I mean, in the short term, I have no idea how high it can go. When we look back on this period in say like 6 to 8 months at the end of the year, I think it'll probably be obvious that it was a warning sign.
But I will come before bringing in FCF and then proof for questions that I've seen this go around. Somebody, I guess, took a playbook off of some of my work arguing that lumber seems to be correlated to cryptocurrencies and Bitcoin. And I had done an interview in 2021 on Kitco where I was talking about the peak back then of lumber before it started collapsing, and made the argument that the first thing that gets hit is probably Bitcoin and cryptocurrencies back then. My argument was that it's all because of liquidity. To your point, Ben, about the idea that it's about how much liquidity is out there. If just for those in the audience that are curious about the connection, if lumber is breaking down, it would suggest that housing is going to break down. If housing's about to break down, that would suggest credit contraction, which should have an effect on anything that benefits from credit expansion. Right? That's sort of the link. There's a lot of people that are referencing lumber, not understanding the cause and effect there. It's ultimately about liquidity and credit ease. More of a side note, but
before I answer your question, I did want to address something, and I will answer it, but I want to address something Michael said. I mean, he's been following lumber for a while, and actually, I started tracking lumber because I saw that I saw that he was tracking it and putting out some good some good research on that. And actually, I noticed that the lumber gold ratio, I think, is at the same level as it was back in March of 2020, or just about. So it does seem like there are some warning signs going on. In terms of your question about are they unregistered securities or are they not? I do think that the Ripple lawsuit will have an effect. I mean, obviously, if the lawsuit is settled and it comes out that it's a win for Ripple, I imagine we would likely see some type of short-term rally in the altcoin market. I don't think the resolution of the case is going to lead to, say, like a secular bull market in altcoins. Because at the end of the day, I mean, like in 2019, none of them were, we weren't even at the point where, I mean, of course, we've always sort of wondered, are they going to ever be considered securities or not? But it's not like there was this massive lawsuit in 2019 that we were worried about. On the altcoin market, at the end of the day, it still came down quite a bit. So yeah, I mean, I think in the short term, there's this uncertainty of this case has helped to temper returns in the altcoin market. If you look at returns of, say, like total, which is so on TradingView there's something called total, and it's every cryptocurrency. There's total 2, which is everything besides Bitcoin, and then there's total 3, which is everything besides Bitcoin and Ethereum. You'll see that total looks a lot stronger than total 2, and total 2 looks a lot stronger than total 3. So essentially, I think that altcoin returns are tempered to large degree due to this uncertainty in the Ripple case. If it's resolved in a good way for Ripple, again, yeah, you might see a short-term rally in altcoins, but at the end of the day, I mean, even if they're not securities, which probably a lot of them will be, but if they're not securities, then it's still not. I mean, it's still not going to save them from if we go into a recession, right? Like securities, if the stock market goes down, let's say like late this year, early next year, because of a recession or something. I mean, like it's not going to save the altcoin market, whether the securities or not. So that's my general view. I think that again, when I think about altcoins, I always think about, are they bleeding back to Bitcoin or not? And I think that most of the altcoin market is likely going to bleed back to Bitcoin for at least until the third quarter of this year. And after we sort of are past that hurdle, the third or fourth quarter, I think then the altcoin market might finally start to make sense again from like a risk adjusted returns perspective. And hopefully by then we also have a resolution. I'm also of the opinion that even if they are securities, it doesn't mean that they're all going to die. I mean, I buy securities all the time, on my brokerage. I just think that what's really hurting the cryptoverse right now is that we just don't have clarity. We just simply, we need clarity. That's all we really need. And once we have clarity on what they are, then we can build, we can create a framework around that. It's just hard right now because no one really knows what it is we're buying. And until there's more clarity, it's going to keep, I think, some of the larger fish out of the cryptoverse. Yeah. So there's always a chance. We always have to consider that there's always a chance that we don't put in new all-time highs in the next cycle. I wouldn't say that it's like my base case. I think my base case sort of still remains that we will probably put in new highs next cycle. But I mean, this cycle has also sort of tested a lot of prior hypotheses. I mean, one of which was a lot of people thought we would, it was impossible for us to go below the 2017 highs, um, and we did. We went below the 2017 highs. And I mean, I know a lot of people in crypto give a lot of the gold bugs a hard time because gold basically just went sideways for 10 years. But I mean, for crypto, for as fast paced as crypto is, there was a time not too long ago where Bitcoin was the same price that it was 5 years before that. And so there really wasn't a whole lot of progress made in terms of the actual valuation of Bitcoin, and basically no progress if you account for the money supply. Like if you account for M2, there's essentially no progress. So I think that my for now. I mean, of course, my opinion can be subject to change, but for now, my base case is that it will put in a new high. I don't think we can say that about most of the altcoin market, as I said before. Maybe the odds right now are maybe 20 to 30% chance that it doesn't put in a new high in the next cycle. Not I don't want to say it's super high. I think where it could become more of an issue though is, so normally what we do normally what Bitcoin does is, in the pre-halving years, is we kind of rally for a bit. Everyone gets excited, they call for new highs. We then go back down later on in the year, and I think that's probably what's going to happen again. In the last cycle, it was a higher low, right? So the March 2020 capitulation was a higher low. In 2015, it was a double bottom. But you also have to wonder, right? Like, what would have happened in March of 2020 had the Fed not printed $6 trillion, right? I mean, like, I don't think that all these altcoins would have gone up nearly as much, right? There were some elements of, okay, they're printing a lot of money, and people are going to look for a place to put that money. There's a chance that if we do go into a recession, right, which of course is still up in the air, but if we do go into one, and the Fed is not as quick to, say, like, come to the rescue like they did last time, then it could suppress the prices for a longer period of time. I still think that we'll probably go you know into into higher prices in 2024 and 2025, but yeah, I think we just run the risk of, like, not really knowing how Bitcoin will behave in a prolonged, you know, let's say prolonged recession or something. And I mean, if the Fed is right, which, I mean, not that they're right on a lot of things, but they're currently calling for a mild recession, which I don't really know if I believe, but certainly if it's a mild recession, then yeah, I think Bitcoin could still put in new highs. I think where it becomes more of an issue is, what happens if there's this, like, windfall event where equities crash another 30% or something, and the Fed is not immediately coming to the rescue. I think that would be sort of the bigger risk. I mean, if you look at the dot-com crash in 2000, 2002, they a lot of those stocks crashed, like, 70, 80%, and it took them a while to put in new highs. And actually, one of the things that kept a lot of the if you look at the S&P 500, it basically got to the prior all-time high, like 6 years later or something. But then we had the real estate market crash. So I think that the real estate market could be the thing to watch next cycle to see, is it going to crash? Because I mean, real estate is also very cyclical as well. Um, and I mean, of course, right now there's very low supply. The demand isn't super high just because of the environment that we're living in. But I think maybe that would be a risk as well to risk assets in general. Because I have to imagine. I mean, I wasn't an investor back then, but I have to imagine that a lot of people were excited back in 2007, 2008, when some of these stocks put in new highs, and then the real estate market crashed, and then everything just sort of crashed back down to the lows again. So that's what I'll be on the lookout for.
Yeah, and I'll add. I mean, I think you never know. Okay, to your point, I remember when gold made its prior peak over a decade ago. People were very excited about gold pushing to higher highs, higher highs, higher highs, and then nothing for a long time. You don't know. I mean, this is just the reality of investing in any asset class, and that's why I always go back to sizing and time frame matters more than a narrative. I mean, For all we know, Bitcoin could be itself in a lost decade. Who the hell knows? I have no opinion on it, right?
And Michael, I mean, to your point though, so, I mean, is maybe it's somewhat biased, but to some degree, as I said before, I mean, in 2017, Bitcoin hit 20K. I mean, it's now 2023 and it's 28K. I mean, that's not a huge gain considering inflation, right? It's probably lost value if you actually account for M2. I believe it has actually. If you take Bitcoin divided by M2, or if you adjust for inflation, it hasn't really performed that well over the last 6 years. So to some degree, we could already be in that situation.
Right, and that's the thing. It's like you don't know if you're in a lost decade until the decade's passed.
Exactly. Right. Yeah. Exactly.
With anything, by the way, right? It's like I made this point before, right? I mean, emerging markets have been in a lost decade plus. Certain parts of the bond market clearly we're in a lost decade given the duration sell-off last year. Maybe U.S. equities are already in a lost decade now. Maybe Bitcoin's already in a lost decade. It's like, again, you don't know, and that's why you always have to be careful getting too sucked into a prediction versus the path. I think is kind of the point to stress.
Right. I would agree with that. I mean, I think that I really do agree with what you said earlier, Michael, is that no one really knows what's going to happen, and we're just all trying to figure it out. It's one thing that I think has improved as this year has gone on is that I mean maybe you would have a different experience, but I feel like as time goes on and as the markets sort of just chop around, some of the people that are more notorious for leaving certain types of comments, they tend to be the first to leave FinTwit because they just get bored and move on. So I'm hoping that as the months go on, it'll be easier to be to sort of express these opinions.
I think that's a good place to wrap this Twitter space up. Ben, how do people reach out to you aside from Twitter and YouTube?
I mean, that's the best way. There's Twitter and there's YouTube, and then I have my website intothecryptoverse.com.
Thank you, everyone, for joining. I'm doing one last Twitter space in about 9 minutes. Stay tuned for that. Thank you, Ben. Appreciate your flexibility and your knowledge here.
Thanks for having me.
Thanks, everybody. Cheers.